All right. It's Jared here from Crypto Plan. How's everyone going? I've got a bit of a special one for you. Do not buy Workhorse until you watch this video until the end. Alrighty, yeah, let's get down to business. I am a former investor in Workhorse. I'm not trying to bag the stock. I'm not trying to bag the company. I'm just saying, watch this video to the end because it might help you out, because there is very poor fundamentals in this chart. And when I bought initially, and you can go back to my videos and watch when I bought it, why I sold it, why I sold out, what I did with it, how much better I've done in my portfolio since selling all these hopium growth stocks. But yeah, essentially watch the video and I'm going to show you why Workhorse is not a buy for me at the moment, mainly if you're a long investor or you're the long-term investor or getting sold in this fundamental bull case, because the chart is quite bearish, and so it should be, because the company is not making money and it is just all ideas. With some orders, I get it, but the cash flow is not there. They're burning way more money than they're earning, and the future is still a couple of years away, unfortunately. And that is that. So yeah, please like the video and please subscribe to the channel if you're new and you like kind of honest chart-based buying and selling information. This is educational. It is not saying do or don't do it. It's just saying watch this to the end. All right, let's get into it. I'm on a daily chart, but I'm on a weekly setup. So there's a really good book, How to Make Money in Stocks in Both Bear and Bull Markets. And there's a couple of rules you got to follow. And number one is the basic rule is don't buy any stock underneath that is trading underneath its 30-week moving average. Not saying you can't make money out of that. Yeah, you could have bought down here at $6.98 and sold out here. Great swing trade, like I say, but the probabilities of stocks having large runs in price like this when they're beneath their 30-week moving average is very small. So looking back historically, you can see that every time this stock broke above and closed above and continued to move up above its 30-week moving average, you had a pretty good run, and especially over here. Now, this particular run here was definitely a hype speculated, so if we're looking at this kind of whole area here, this was the hype speculated, we're going to get a UPS contract, right? Even back here is probably was rumored that, they were going for this contract. So this thing's been going on for a while. So you've got to realize that even at today's valuation, they are well above potential earnings. It's all predicted future earnings, and there's no guarantee of that because you've got lots of companies playing in the space. And I know that fundamentally they've got a great model of car and everything, but the reality is that Tesla spent 4 years, 5 years in a sideways motion, hovering around its 30-week moving average before it really broke out, before the market actually realized that they wanted to flood their money into it, right? So that is something we have to be aware of. Now, the reasons why I don't believe it'll break up above its 30-week moving average anytime soon, and which is going to give you, if you're getting told targets of whatever, $50, $150, like where, it's all speculation. It's complete and utter speculation. My personal journey, I bought it somewhere around 15 and, averaged up to maybe $16 or $18. Luckily enough, I got out about 21, living on the hopium around here when it was just nearly breaking 30, going, I'll sell at 32, I'll sell at 33, knowing that, there was this ceiling being created right here. And then even here to the fact of just before the contract was not announced in their favor, they're pushing the price up to 42. So that is based on, a billions of dollars worth of contract that doesn't exist anymore. So even down here, how could you warrant a $15 a share price when, one, they don't have the contract that they were going to get, and two, what contracts are there, or what cash flow, what earnings are there? Looking down here, we've got minus 70, minus 17 cent, not minus 40, not minus 94 cents per share earnings. The estimate was 17, so they're missing. Even down here, they're saying they're going to get closer to, or less of a loss, but we're still running at a loss. So fundamentally, they're in bad shape, as in they're not a profitable company. I know a lot of unprofitable companies have done well, and that is not something that you can really worry about. But the reality is I'm more worried about the charts, and that this particular run up here is completely bullish, and there is potentially a lot of bag holders that are still holding on with a whole lot of hopium. All right. And then the rest of the holders of this stock are potentially swing trading it on that, retail investor tailwind, So, and the other thing you've got to be cautious about is that the stock saved itself just before this gap here. If it was to ever test down below here again, you're talking about getting pushed back into the $5 range. And I think, and I believe that the reality is that this stock, in the medium term is probably worth about $5 and will continue to trade about $5 once, if and when it doesn't ever cross this 30-week moving average or close a week above its 30-week moving average. So we'll go to the weekly now. I just want to point someone out that to people that aren't chart traders. Something that I've learnt very much the hard way recently, especially trading crypto a lot, is that this particular setup is bearish. So if a price discovers its way to an all-time high and then it corrects and then goes up to an all-time high that's a little bit higher and then corrects, about to the same level and then goes up to another all-time high, and it's not making higher lows constantly, it's not going high, low, higher, higher, low, higher, 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 low. It's quite bearish, and it's just saying that, the price is being pushed higher by, hopium, by speculation. But the reality is that there is a bearish kind of outcome to happen. So take away all the fundamentals, and then you've kind of got this flag that's playing out. So when you've got a pole and a flag that is pointing upwards, it's generally bearish. And it's not saying that it'll fall at any particular time, but it's saying generally these patterns break to the downside. And you can see what happened there is that broke to the downside. And now what you've got going on is this particular thing, that there's probably going to be a downtrend line that plays out. So talking about this 30-week moving average, this red line, the stock needs to break above this. If you want to buy this stock and you want it to go far and long, you need the consensus of the market to agree with you, right? So there is good volume now, but this is like hopium volume. And the fact that every time, and this is several weeks now, it's finding a ceiling there around that $18 mark, just below the weekly moving average, the 30-week moving average. So 1, 2, 3, 4, 5 weeks now. It's been up and around there, but hasn't been able to close or even break above that line, let alone close above that line. And the volume is, good for 2 weeks, but pretty average in general, compared to, say, back here when the volume was huge. Now, what do you want to see if this stock becomes good again? And it can break out and be a growth stock again, but I don't think it will be. You want to see a progressive stepping up in this volume while price just slowly steps up and breaks out of there. And definitely want to see a candle close above the 30-week moving average. But like I say, the reason why I don't think it will ever really break out of this range and go higher and make new higher highs in the short term anyway, or even the medium term, as in the next 6 to 12 months, is that this is the classic topping pattern. So this here, this where a price hovers along the 30-week moving average is stage 1. This is a stage 2 breakout while it's above the 30-week moving average. But then it starts to create this topping pattern where, the price is hovering around it and it can't quite go any higher. The moving average slows down, it breaks beneath it. Now we're in stage 4 downtrend, right? So this potentially is going to play out this way, that price comes down, pops there, bang, moving average goes all the way down, and then it will kind of bottom out again. It's somewhere around the $5 range, maybe a little bit lower. And then it's got to set itself up, build some steam, be in a bear market, and then kind of firing out there. Now, I'm more than happy to be proved wrong, but I'm not putting my money into this stock ever again until that happens, until I see solid breakout on volume of that 30-week moving average. Now, the reality is, and you can look back to my very early videos, that I sold all of my workhorse, all of my growth stocks like Golden Nugget, everything that I had, there was a growth stock, and I didn't sell it on technicals. I just thought that, these are all hopium. These are all companies that don't have revenue. It's all hype from YouTubers and things like that. And the reality is that they all ended up crashing, because that's what happens, is that, things are inflated by air. And the beautiful thing is that I put my money into 3 good companies that were Bitcoin miners and did really well for me, and it's built a portfolio. And there's all those videos in my YouTube channel there that can tell that journey for you. And the reality is that they're stocks that broke out on volume above the 30-week moving average in industries that were doing well, with the wind behind their sails. And, earnings and money coming through the doors, and, businesses that were growing and growing and growing. They weren't just hype and speculation. And that's the reality of that. And I hope that, this video, if anything, makes you think twice about your holding in Workhorse, and or if you haven't invested in it yet, that you have a think again about what you're doing. And like I say, there's no harm in swing trading. If this is going to swing, there's 30% amounts of profit to be taken between the swing highs and swing lows, even on the downside, or shorting the stock, so that it's not like Workhorse is a bad stock for making money out of. It's just don't go in blind on hopium, putting in a long position and just hoping that it'll go up, because you might see it go up 30% and then you'll see it drop back down 15, and then it'll be up 20 and down 15. And next thing you know, you've been holding on to this thing. Your opportunity cost in the market is gone, and everything, is flying around you. So if you're gonna chase and invest and trade stocks that aren't making money, that's fine, but make sure they're above the 30-week moving average, which is inclining. So from here, when it turned around, it was inclining, going upwards and all the way to the top. Once it starts curling over, it's goodbye, game over, going into a bear market in general. I've been Jared. This has been Crypto Plan. I hope this helps you. Please like the video if you like kind of honest feedback on technicals and the way stocks operate, no matter what the fundamentals are, because the fundamentals, no matter what they are, people have to buy and sell a stock. And the most important fundamental is price action. So if it's got the best fundamentals in the world, but no one's buying it, then the fundamentals mustn't be that good. You must be getting sold a lie. So the reality is that this was all hope of great fundamentals and future growth. Future growth doesn't occur, it goes down. Or maybe it's coming back into business, we've still got a good product. Nope, actually investors are pulling out of it and it goes all the way down. But, it's still a good company to hold. If you had down 5 here, if you are a long-term investor and you're willing to hold for the long run, but I'm into making money in general, and I'm quite happy buying something at $3 or $4 and selling it at 30 and just walking away. If it comes back down to $5 and I get another run up to 15, great. But that's just me. I'm in this market to make money, not to be in love with my shares. I got over that very quickly in my journey when I was buying companies I liked or products I liked, and the stock just wasn't going anywhere, because just because you like a product doesn't mean a stock is going to go up. All right, I'll catch you on the next one. Bye now.